All right, what is good, guys? Hopefully, all of you had a good end to the week with trading today and the market. You guys ended green. Let's get into this trade recap. I'm going to go over the trade that we took today, kind of break everything down, and yeah, let's get into it. All right, so first things first, we got New York open here where this orange line is marked out. We did see a lot of chop intraday here, or market open for the first couple hours of market open. We got a lot of chop. So I didn't, excuse me, I didn't wind up taking anything. And then I did come across this lower time frame setup that I wound up taking. I'm going to go over this trade with you. So first things first, what do we have? We have this buy side liquidity, or this high made here, this high here. All right, two major highs that I was looking at for price to come back up and target. Now, one of the first things I started to notice, we started making higher lows here as well as higher highs, right? So we saw the market flip trend, which is giving me an indication that the market was looking to most likely look to head higher, right? We got higher lows being formed, higher highs, higher high, higher high, right? So now, what do we get first here? We see price find a bottom here. We push higher and we get this break of structure. Now, why is this a break of structure here? Because I know some of you may be confused about break of structures or market structure shifts, the difference, whatever. I'm going to break that down. It's super simple. Literally, like I just said, because you're seeing that, because you're seeing price make higher lows and higher highs, that's showing that price is in an uptrend, right? And when you get a break of that previous high, you're getting a break of structure or a break in market structure, right? And then price is going to look to make another high, more than likely. That goes vice versa, all right? With this, making higher lows or lower highs, lower lows, or lower highs, lower lows, right? It goes both ways. And for example, like the same thing, this here would be a break of structure. All right, just kind of trying to show you guys so you understand the concept of break of structure, right? This here, this candle closed below, break of structure, right? Retest this FEG, reject off that, flush, boom. Same kind of concept with the trade that we took, right? So what did I see? Saw price make this break of structure to the upside here, and now none of you guys should be entering a trade purely off of a break of structure or a breakout. Same thing with like a market structure shift. You never should be entering on the candle close. Even though we do get that close out, you don't want to enter off that. You want to look for price to retrace, get a better entry, and for price to fall back into another confluence, and give yourself an indication that more than likely the market's going to continue in that direction, so you don't wind up getting faked out. I see so many people, so many of you guys enter trades purely off of a candle close above either a high or a low, a breakout, break below. I see so many of you guys entering trades off of that and getting stopped out, and then you're wondering why. Well, that's exactly why. You never want to enter solely based off of that. You want to look for an IFEG, a fair value gap, order block, breaker block. Right now, I'm going to go over what I saw today, what we had on this setup. So to start off, we had this bearish fair value gap. That price came back up, retested, boom. We rejected off of that. But what does that also create? It creates an IFEG, a sitting IFEG here on the 1 minute. And we also have this bullish fair value gap that created on that candle that closed above this structure here. So once I saw we were pulling back into this bullish fair value gap as well as that bearish IFEG, that gave me two more confluences after that break of structure, that price would most likely look to target these highs. Now, like I always tell you guys, price is always looking to target liquidity in the market, no matter what, whether it's internal range being, like I said, that order block, IFEG, fair value gap, those are internal range liquidities. Now you have external range, which is like a swing high, swing low, or sell side, buy side, right? We got buy side, sell side. Price at some point is always going to look to target those liquidity levels. So with knowing that in your mind, or with knowing that in mind, what am I thinking next? I'm looking for price to take out this buy side liquidity up here, right? So think about it. We have price in an uptrend. Price is breaking structure, continuing to break structure to the upside. And where's the closest liquidity level for price to target? To pull through like a magnet, right? It's that buy side up here. So, okay. Perfect. Now we have those two confluences on this IFEG, this fair value gap. I take my entry once price closes back above this fair value gap, and that retest on this red candle here is where I took my entry, right? We see a little bit of consolidation, move up, consolidation, boom. Price starts to head higher, continuing to make these higher lows, higher highs, right? Boom, boom. All right. But unfortunately, we did not get that this first liquidity level to get taken out. We ended up creating equal highs up here. Got a retracement back into this fair value gap once again, where price completely filled. What do? We bounce back out of this and head straight to that buy side liquidity as our first take profit, where I scaled my first set of contracts. And then we get you see a little bit more consolidation, retest to that fair value after that move, boom, retested this twice. Let me show you guys. And this is what's keeping price above this. Now, had we closed below this, I wouldn't have been so confident in this trade going to that second take profit. But we came back down to that 50% retracement in this fair value gap. Boom. Where do we head? Right back to that second high to get our second take profit hit. Now, these contracts ran about 140% at the top, or at least where I took the highest contract that I had scaled out was at 140%. I believe I entered these at like 44 con and was able to sell. I don't even remember what the last sell was. I would look at my phones over there. But yeah, 140% on that trade. Not bad. We waited for the right setup. We didn't wind up getting caught up in this chop. Like I said, the reason why I didn't take any trades in here, I just didn't see anything that really aligned with my strategy. Nothing that I was confident in, especially when looking at that higher time frame. We had a lot of that chop. A lot of this just market just straight chop, right? Straight ranging. And I didn't want to get involved in all that, especially on a Friday. But yeah, hopefully you guys are also enjoying these trade recaps. I'm trying to pump them, put them out as much as possible, and trying to be on the grind with that, just to give you guys an insight on what I see, what you should be looking for when you're trading. Because I know a lot of people, like a lot of you guys, are going to see, like, you may have seen this fair value gap, right, as one confluence, but maybe you didn't see this inverse fair value gap that was also another added confluence to give you confidence in that trade. So there's always a bunch of little things that you want to be looking out for, whether, it also could be order blocks, breaker blocks, supply, demand, support, and resistance, even though I really don't trade those. But any of those little things you guys want to be looking out for all the time, because they're just going to be added confluences to your strategy and just give your trade, or just have a higher outcome in your trade playing out, right? So that's pretty much going to wrap it up for this trade recap. And yeah, I will catch you guys on Monday. You guys have a good weekend. Catch you guys. Peace.